It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
We've still got fairly constrained supply of stock on the market, but there is strong demand out there. And if people are realistic on price, they're doing very well and they've got a very high likelihood that they're going to be able to sell their property and sell it for a pretty good price at the moment.
And that is Cameron Kusher on the Real Estate Breakfast this morning as we talk about your local property news and trends. We cover areas like Hobart, Darwin, Sydney, Perth, Melbourne, you name it, up and down the country. And you can stream us right now on your favourite platforms, whatever that might be. And it is a Thursday morning, October the 16th. You know, more Australians in their 40s, 50s and even 60s are taking on more home loans. Yes, risking retirement with major debts still to pay. Now, lenders report a rise in borrowers over 40, with loans up 4% in the past year for upgrades, investments and also extensions. And experts are saying that longer loan terms and high prices are driving this trend as buyers re-enter the market to help their family, and a growing sign of affordability pressures across generations. And generational living, you know, you see some of the new stock being built by developers. This is a really good, smart move, especially if people are cashing out of the family home that they've been in for the last 20, 30 years, whatever, on a bit of a parcel of land, and then they buy one of these new generational homes to help the family members out. Might be a son, might be a daughter, might be their mum or dad. Great stuff. If that is you, if you've done that, let us know. Our email address is myrealestatepodcast@gmail.com, or let us know with your voice. You've got that message recorder, so you'll find that in the show notes. Would you believe that it is 78 days until the 1st of January 2026. That is so scary as we catch up with Cameron Kusher in Sydney. And Cameron, welcome back to the Real Estate Breakfast. I don't know about you, but yes, 78 days and counting. Has it been a fast year, this one, for you?
It has been a fast year. There's been a lot going on, and yeah, it's amazing to think that it's almost over. Better get cracking and make the best of the last few days we've got.
As I say, generational living, this is something that you would have been observing over a long period of time. And as I say, these developers, you know, they're pretty smart, these ones that identify, yeah, there's a market for this and it seems to be growing. Let's build it and people will buy the stock.
Definitely. I mean, if we have a look, there's been a rise in generational living. And I think also just the fact that housing has become so expensive that people are trying to buy bigger homes earlier. If you go back to sort of the 60s and 70s, a lot of people bought, 2 or 3 bedroom homes. They were made of timber and then they expanded them over time. If we look today, a lot of people buying brand new homes are buying bigger homes, whether it's a 4 bedroom home or a 5 bedroom home. And in a lot of instances, they could buy a property that's a lot smaller than that and it would cost less. But because they know that housing's expensive, housing grows in price, people are trying to get that bigger home sooner. And then over time, they'll grow into that property. And that may be their own family, or that might be bringing in, relatives or their parents, or as you talk about, the generational living aspect to that as well.
And if you look at the other end of the scale, I've got some mates of mine that are over 50 and they're on their own. When they upgrade, they don't downsize, they stick with the big house. And I've got one mate who's in a 6-bedroom, 3-bathroom property. It's just him. He's got a girlfriend that owns her own property. But like he says to me, when I finally downsize, this property is going to be worth gold.
Exactly. And that's the strategy, right? So if you've got an owner-occupied home, the owner-occupied home is not just about shelter. It's an investment as well. And it's one of the few investments that's basically tax-free. Obviously, if you buy investment properties, there's taxes on that. You got capital gains tax. There's no capital gains tax on the family home. So a lot of people live in houses that are much bigger than what they need because they know that those properties are likely to increase in value at a much faster rate than something smaller. And we've seen seen this over time, that house prices tend to rise at a much faster pace than unit prices. So people preference larger houses that increase in value. And then, as you said, when they come to downsize, they're in a very comfortable position.
Now, I've got to congratulate you here, Cameron, because you were with REA for a number of years and even longer with CoreLogic. You've struck out on your own. You're going it alone and, all power to you. Been in the industry for a very, very long time. Not all economists decide to do this, so, I'm tipping my hat to you.
Yeah, thank you very much. So after almost 25 years working for some of the bigger companies, I've gone out on my own, offering a whole range of services. So consulting services, obviously housing and economic market presentations, content work, property spokesperson work, and working on a few of my own products as well. So it's exciting. It's scary. I never really thought that I would be owning my own business, but that's where we are. Yeah, it's very exciting to be doing my own thing and trying to build my own business for myself.
Well, it's come at a time where, boy, has the market ever been busier in 2025. Home guarantee scheme, this just continues to be on the radar for everybody. Real estate agents are licking their lips. Of course, the consumers of real estate are also into it big time. Plenty of talking points.
There certainly is. We've got the home guarantee scheme, which was going to come in at the start of next year, but they brought it forward to October of this year. And by all reports, it's only been available for 14 days. It is driving a huge amount of demand for first home buyers. And we've seen this play out before. When you provide a lot of incentives for first home buyers, you do pull forward that demand. And that seems to be what's happening right now. But the side effect of that is it also tends to push prices quite a bit higher as well. And if you've got a property under those price caps for the home guarantee scheme, it's likely that you're going to see quite strong demand for that property. And you're probably going to sell it at a better price than you would have just a couple of months ago.
Yeah, it's such a game changer. We've been talking about it most of last week. The only thing that does scare me is just how big some of these mortgages are going to be for many, many people. Now, we're talking to Cameron Kusher there in Sydney. When we come back, I want to talk about the new housing supply. We'll also have a look at the auction clearance rate. And we'll look at what Cameron's thoughts are between now and Christmas. We'll do that next.
Eager to expand your property expertise? Enhance your real estate know-how with us.
I want to pick up on a hot pick right now for first home buyers. We know that you're listening to the podcast. You're always after, where's that area that I can get into? Margaret, you have got a pick for us this morning.
Well, I've got a lot of picks, so let's go very quickly. Inner city suburbs of Melbourne like Essendon, Brunswick and Coburg, you can actually get units there for $570,000 average price, as you can in inner east Brisbane for around $510,000. But if you're after a house at the moment, still Melton, which is right smack bang in the middle of significant infrastructure plans out to the west of Melbourne, median price of a 3-bedroom house, just $489,000. What's not to like about that?
And right now it is time for another property tip, and we were talking to Peter Gavalis there in Perth recently. Let's go back to Perth, and Peter, you have got a property tip for us.
Yes, Craig. So in a market where there's not many properties for sale and people are getting desperate to find a property, they often look at buying a property on a busy road or a roundabout or under high voltage power lines. This is not a great investment down the track, because when the market does turn and there's a lot more properties on the market for sale, these type of properties are going to be a lot harder to sell.
Yes, it's always a temptation to go for those properties because in many cases they're not being moved on, and it's like, okay, we can get in for that price point, but not always a prudent decision.
No, exactly. And a lot of sellers who own properties in these compromised locations always tend to bring them out when the market is going strong like it is at the moment.
Decode the property market with insider knowledge and insights to better navigate your real estate journey. Let's explore together the power of real estate.
And it is a Real Estate Thursday. Cameron is with us. And yes, let's talk about the new housing supply, because you've got some thoughts with regard to that.
I definitely do. If we have a look at new housing supply, the federal government has this target of 1.2 million new homes over the next 5 years. Well, it's over the next 4 years now. And we're struggling to hit the level of housing construction that we need. What we're seeing, though, is as interest rates come down, as that gap between existing home prices and new home prices narrows, we're starting to see more building approvals and starting to see more dwelling commencements coming through the system. But, 1.2 million new homes over 5 years, that's 240,000 new dwellings every year for 5 years. That's a level of construction we've never been able to achieve here in Australia. So we're going to have that deficit. It's extremely unlikely that we're going to go anywhere close to delivering that volume of new housing. But I would say the good news is that projects are becoming more viable. Things like the Home Guarantee Scheme create more demand for housing. Individual states are starting to do a lot more to try and facilitate more new housing delivery. So we should start to see housing construction pick up from here. But in terms of the likelihood of reaching that target, it's very slim.
Yeah, one of the problems, of course, is the amount of manpower, woman power in the trades. That has been an ongoing issue. I'd love to see that sort of open up a little bit more. Auction clearance rates, now, they seem to be humming. What's your take on them?
Yeah, we've seen very strong auction clearance rates at the moment. For most of the last couple of months, we've seen clearance rates consistently above 70%. 7 out of every 10 auction is selling successfully. It speaks to the fact that as interest rates have come down, as consumer confidence has started to improve, as the economy started to improve a little bit, we're seeing a lot more willingness from people to go out there and buy properties. We've still got fairly constrained supply of stock on the market, but there is strong demand out there. And if people are realistic on price, they're doing very well, and they've got a very high likelihood that they're going to be able to sell their property and sell it for a pretty good price at the moment.
We should look at the run-up, as I mentioned. What did I say? 78 more days until the 1st of January 2026. That is just zooming up on us. It's not far away at all. How do you think that the market is likely to play out between now and Christmas time?
Look, I think the market's going to be strong for the remainder of the year. We will start to see more stock come onto the market in this later spring selling season period. We know once the football grand finals are over, people start to get on with things a little bit more. But supply is still low, and we are still seeing very strong demand out there in the housing market. So I expect we're going to continue to see prices rise, and we may actually see an acceleration in the rate of price growth over the coming few months as more and more people are trying to purchase a home this side of Christmas.
All right then, Cameron, great to chat with you on our Thursday. As I said, good on you for going out and starting up shop on your own. That is always a tricky thing to navigate, and all the best. Thanks for coming on to the Real Estate Breakfast.
Thanks for having me again.
If you're a new listener, welcome. We talk to the most knowledgeable real estate experts across Australia every day from 6 a.m.
This cut shows that there's an increasing level of competitiveness between the lenders to try and grab that kind of borrower attention, because there's not a lot happening with interest rates. So we're seeing that Westpac cut. We're also seeing more incentives being offered on top of home loans, as well as just the interest rate.
And we want to touch on the potential house price forecast. This is into 2026. Graham.
It is indeed, Craig. We have the combined forecast from Westpac and ANZ at the moment. For 2026, it's interesting, we're seeing pretty house price forecasts that are larger than in 2025. So for Sydney, for example, we're seeing about 5% across the two banks, whereas they're kind of saying 7% for 2026. For Melbourne, we're seeing it go from 4 to quite a large 7% as well. So nearly double the forecast in Melbourne next year compared to this year. Also up in Perth and in Adelaide, not so much in Hobart and Brisbane for some reason, but generally pretty positive house price predictions from the big two banks for next year.
We connect you to the best real estate information across Australia. The Real Estate Podcast.